Hello and welcome to Unblocking the Chain, where we delve into the intersection of traditional finance and digital assets. If you're curious about how these two worlds collide and what it means for your investment strategies, you've come to the right place. I'm Michael Prenival, and today I'm joined by Drew Bradford, Chairman of Jelly C and CEO of Catena. Welcome, Drew.
Thanks, Critter. Pleasure to be here.
And we're also joined by a special guest, Glen Harrison, the Vice President of Operations at Iren. Welcome, Glen.
Hey guys, nice to be here.
Great stuff, mate. Okay, before I give a summary of Iren, I'd like to give a shout out to a few of our listeners. As always, we are nothing without you. I want to thank you all, but specifically to Buffy the Paper Slayer, Buffy the Paper Hand Slayer, I should qualify, who's made many shout outs to Unblocking the Chain. So thanks very much. Okay, a little bit about Iren before we get into the questions. Iren was formerly known as Iris Energy Limited. It's a company based in Sydney, Australia, that specialises in operating Bitcoin mining facilities and next-gen data centres. These operations are powered entirely by renewable energy sources, aligning with the company's commitment to sustainability. Iren's facilities are optimised for high-performance computing tasks, including Bitcoin mining and AI cloud services. Founded in 2018, Iren has grown to become a significant player in Bitcoin mining and the data centre industry, with operational facilities in locations such as British Columbia, Canada, and Texas, USA. Iren's leadership team, specifically Daniel and Will Roberts, the co-founders, have a background in infrastructure and were incubated by the Millionaires Factory in Macquarie Bank. Iren has 144 employees and listed on NASDAQ on November 19, 2021, at the height of the crypto bull market. We're very familiar of listing a fund at that particular time as well.
Sure are.
It rose to a price of just shy of $25 on listing, dropped to $1.19 on December 23. In December 23 in 2022, and that was just after FTX, and has since bounced back to $6.64, up 9% last night. The outlook looks rosy for Iren with the move into next-gen data centres. Rightio. With that out of the way, let's get cracking on the questions. So, Glen, can you tell us a little bit about your background and how you came to work at Iris Energy, now known as Iren?
Yeah, so my background, I worked at Macquarie as well, similar to Will and Dan, in commodity markets and finance. I was there 14 years. It changed a few names over that time, but started off in metals and agricultural commodity products, and I was kind of jack of all trades there. So I was COO of Asia Pac for commodities, kind of like the glue between risk, legal, the traders, the financiers, provided debt finance and equity finance to companies. And real commodities background really. And then I worked quite closely with Will Roberts. We used to sit near each other. And we, in 2017, we started a new project, business development project. We brought in probably 30 odd support staff to help us over a 4 or 5 month period to put together a 100-page doc. And essentially it was revolving around taking custody of Bitcoin and cash and carry plays using the new CME futures contract for Bitcoin. We took that proposal right up to the CEO at the time, and it was knocked back on. From a risk perspective, we actually laughed out of the room. So from there, I continued at Macquarie for a few more years, but about 6 months later, Will Roberts left, and then he started Iris Energy with his brother in 2018, like you said. And in just after COVID or March 2020, they asked me to join, and I joined in June, July that year. So yeah, that's my background.
Glen, that when you said you got laughed out of the room, one of the things that we're doing is a stable coin, which I tried to do for NAB, and my chief technology also, and that's why we're doing our own startup as opposed to doing it all for NAB. So very familiar.
Dan, I've got a question. Sorry, Glenn, I've got a question.
I wish.
Between Dan Dan and Will and yourself, who was getting the coffees at Macquarie?
Well, when I came back from London in 2012, Will was 21. I was about 9
So
years
Will
older
was
than
getting
him.
the coffees.
So Will was the
Fantastic.
youngest at the time.
And your
He's come
lunches.
a long way since then. Runs we were a couple of $1 billion market cap not that long ago. Company at 34 or something years now. So he's done great.
Yep, all good. Hey, do you mind running us through the history of Iris Energy / Iren? How it started as a sustainable Bitcoin miner, and then last year raised capital to operate data centers optimized for AI processing.
Yeah, so founded in 2018. Essentially, the brothers built a business. They built a data center platform. It was always optimized for various energy-intensive applications. And it was a focus, obviously, on Bitcoin mining at the time. The margins were there in Bitcoin mining, and the potential for growth was significant. So that's where the capital went. But we had an MOU with Dell right back in 2019, 2020 for high-performance computing purposes. Now, granted, the brothers and everyone else didn't foresee the extremely rapid emergence of AI playing out like it has since then. But it played well to the investment thesis, which is essentially having scarce land and power and renewable energy. And that's where the business was built. It started off in British Columbia. And then we purchased more properties, much larger properties and megawatts down in Texas and elsewhere. So essentially, it was really built on the premise that like digital technology expands exponentially, social media platforms, the internet, and the like. But physical real world assets can't scale in that way. So if you can scale quicker than your competitors and you have large swathes of scarce renewable land and power and grid connections, then you're going to be very competitive in that environment because the margins will scale with the exponential way the digital technology scales, and you'll be able to outcompete your competitors by building quicker or from first principles, more efficient data centers, and that's really where the business case started from. And we've kind of demonstrated that since our IPO. We've increased our operating footprint from 30 megawatts to 660 megawatts today, and on track for like 910 megawatts later this year. And that's a significant load, electrical load, and we could only do that because we've got large volumes from Texas, really, which is much larger than, say, Australia, for example. And we started our AI cloud business early 2024. The business is performing really well as well. So that's in addition to our infrastructure platform. We're actually got a vertically integrated stack there. We've got our own cloud business in our own data centers. We're looking to grow that in a sensible way. And we've got 2.9 gigawatts. So the 910 megawatts that we'll have operating later this year, we've actually got another two gigawatts that we can build out in addition to that. So 2.9 gigawatts in total that we're looking to monetize over the next few years into the AI co-location market. And our key initiative at the moment, which we released to the market, is a 75 megawatt liquid cooled data center in West Texas that we plan to have online later this calendar year. Yeah, so very excited by this opportunity and seeing lots of demand for liquid cooled data center capacity.
Well done, mate. Sounds great. Just give us a sense of what your role does as the Vice President of Operations at Iren.
Yeah, so VP of Ops for British Columbia. So we have 3 data centers. That's where we started. We purchased one down near Invermere. It's a beautiful spot down there between 2 mountain ranges, actually. Lots of good ski fields, good golfing. That was 30 megawatts, quite small now. At the time it was seen as large. And then we built 2 more, one in Prince George, 50 megawatts, looking to expand to 80 megawatts, and one in Mackenzie, 80 to 100 megawatts. Well, 80 megawatts operating at the moment, with 100 coming, another 20 coming online in a couple of years. So that's 160 odd megawatts in BC. And over the last few years, we've really built out those teams, and they're humming along really nicely. And there's lots of growth in Prince George specifically, where we've got the AI cloud business and a lot more high performance computing going on, which is somewhat more complicated. It requires different staff. And day-to-day role is really managing the processes, controls, and managers that run those teams, preventative maintenance, making sure that we're online 24/7, That's really the large part of it, and having people that are obsessive, compulsive around keeping things online and always trying to determine what could go wrong and making sure we've got processes around that and spare parts and preventive maintenance. So yeah, that's generally the role of VP of operations.
Glenn, can I touch on something you mentioned just a minute ago, how you're shifting to the liquid-cooled variety versus just air-conditioned rack space. Can you give, for our listeners, there seems to be a trend in across the industry to be moving towards more liquid-cooled space, obviously a little bit more expensive, and that would be a big change in a lot of data centers around the world. Can you go through why and what the benefit is and that kind of stuff? It just seems to be a trend that's really starting to boot off.
Yeah, so most of your listeners probably have used language learning models by this point, which is similar to like the Google search engine beforehand. Like you'd put a search in and it would come back with some results, but the LLMs use a lot more energy intensive compute. So the GPUs, the NVIDIA GPUs that are on the back end of that in data centers that exist at the moment, for example, OpenAI's, ChatGPT's, there's hundreds of thousands of those GPUs that are working very hard to give you that the answers back to the request, and the answers are far more comprehensive as everyone can see. So because the GPUs are very different, they're very high energy intensive. They utilize a lot. They give off a lot more heat, and they need a significant amount of cooling in order for them to run. And that's what we build. We build the data centers so that we have redundancy for the cooling. Liquid and glycol mixtures. They essentially take off a lot more heat than air can. Now, our air-cooled data centers are very efficient. We have 60 to 80 kilowatt racks, which doesn't mean a lot to a lot of people, but they're really efficient and really cheap. And we move large volumes of air through these GPUs to take off the heat. But as the GPUs get more and more advanced, they give off more and more heat, and they want lower and lower latency, so your searches are quicker, especially when you start searching for videos or creating videos and pictures. Those data centers need to evolve and change to liquid cooled data centers, which essentially just means there's like a glycol mix that goes through to the cold plate near the chips, which cools down those chips at a better rate than air. And then that liquid comes out and goes to essentially like a CDU, like a cooling distribution unit, which cools it down, and then it goes outside the building to like a chiller or a dry cooler, which cools it down further depending on the temperature of the day or the time of year you're in and how hot it is in the environment that you've built that data center. So there's more components to it. There is more CapEx. The cost per megawatt is a lot higher, but the opportunity is higher too.
So we're going to start seeing these LLM models charging us more than $20 a month if they have to replace all their data centers with liquid cooled.
Yeah, the LLMs themselves are getting more efficient. The software that we evolve, so potentially not for a simple search, but if I think Dan Roberts has it on his Twitter. Actually, he may have even pinned it. But it's the I'm trying to remember the what he's got. I could look it up. But essentially, when we started using coal for steam trains, the more, and coal was quite expensive at the time, but the more and more that it became available, the more we used it, and obviously it took off globally and became a core energy product for all of us. There's a little bit like that with GPUs. The more we use it, the more we want, and the more efficient we get at using it, but the more we're going to do with it.
It makes sense.
Build videos and everything else, and there's going to be more data centers as a result.
Okay, just putting aside the AI data processing for a moment, we have a lot of listeners who are very interested in Bitcoin, and the genesis of Iren or RS Energy is in Bitcoin mining. Can you give us a sense of some of the challenges that you went through, Glenn, or the company went through with the volatility of Bitcoin and handling a Bitcoin mining operation?
Yeah, it isn't easy doing Bitcoin mining well. You got to operate from first principles, make sure that there's lots of the design of your data centers is really robust and will last 20, 25 years. Everyone that works for us are infrastructure guys, They've been oil and gas for 20 years, 30 years. Our COO, David Shaw, for example. So that mantra, that culture is internal. We don't have any like kind of crypto punks and things like that work for us. So we try to build everything from first principles. We spend a little bit more money than our competitors. Our operations are a lot better. We're more efficient. We have greater margins at pretty much every level. If you objectively looked at it across the 10 other listed companies. But to get there was a hard slog. We were slower to get off the ground. We didn't buy 100 megawatts worth of containers and get them shipped from a pretty shitty vendor and install them wherever and hope that they worked. And then a year later, you find out half the thick breakers keep breaking and you're not mining well and your operational effectiveness is low. So we were slower off the mark because we were building things that would last 20, 25 years. That was hard. Trying to convince the market to give you more capital when you're slow off the mark is hard. And then accounting for the different temperatures. We started off in BC where it's quite cool, like maxes out 35 degrees centigrade, maybe in summer for a few days. Then building it down in Texas where it maxes out 45 degrees centigrade. We had to have the flexibility there in our data center operations as well. And then there's a lot of easy money that flowed at times in the market, and it wasn't necessarily smart money a lot. So that some competitors could raise large volumes of cash without good operations, which diluted the ability for us to raise money at the time, which I think was difficult. And it's only now that we're seeing that significant difference in gross margins and operating profit and that from doing the mining relative to them. So, but it took a few years to get there.
Yeah, sounds like huge fluctuations in the revenues as a result of the the rewards being paid in Bitcoin mining.
And the hash rate, like the massive growth in hash power across the industry over the last few years. There's been a lot of people coming into the space. I imagine the competition's been tough.
Yeah.
Yeah.
Okay, so so the Bitcoin mining businesses, trade on a 6 to 7. Sorry, go ahead.
I'll just expand. That's exactly right. So you have forecasted cash flows, and then you've got a whole bunch more competitors come in that have raised money back in 21, 22, and your hash rate goes, skyrockets, and your margins come down, and that changes everything. So yeah, that's a big part of it. That global hash rate for sure.
Oh yeah, look, it went from 21, 22. 200 exahash across the industry to now over 1,000 exahash. So, in theory, you can budget for getting X number of units and you've got to divide it by 5 because the industry has expanded so quickly.
Absolutely. That's why your cost base is so important.
Yeah.
Absolutely. Hence why you're not in Australia with our current power things. Big election issue over here, Glenn, as you would appreciate. The cost of power, and at the moment we're sort of well above the OECD average.
So, Glenn, just Bitcoin mining businesses trade on around. This is a generalisation, but trade on a 6 to 7 multiple of revenue. Whereas AI data centers are a lot higher at 19 to 22. Has this influenced the direction that the company's taken, and has it influenced the timeline in, transitioning from Bitcoin mining over to AI data processing?
Yes. There's an incentive there to grow the data processing, the high performance computing side of the business. It diversifies our revenue base to take into account lower risk in those bear markets, Bitcoin bear markets. And the PE ratios definitely will allow us to potentially raise more capital at higher valuations as we can demonstrate that we can build these facilities for the majors. So yes, it definitely has.
Yep.
So we're seeing Hut 8 split their business between the AI piece and the Bitcoin mining space. Do you see Iren doing a split one day in the future?
A corporate split, I'm not so sure of. I haven't heard any discussions internally about it, and I haven't chatted to the guys on it. Potentially, I think there'll be definitely an operational split. There are a lot of parallels in terms of maintenance, preventative maintenance and the like between the two businesses, but you'll probably have a customer service business that is separate from the Bitcoin mining side, which doesn't really have a customer. It's just got a protocol. You'll have separate security.
Yep.
Facilities for co-location clients and things like that. Probably different branding and the like. So yeah, I can see it being split from that perspective.
Just on the the makeup of the company, focused on Bitcoin mining versus AI data centers. As we know, Bitcoin mining revenues halve every 4 years or so. What's your view on the Bitcoin layer 2s making up that revenue shortfall? And, will that drive, I guess, your company direction going forward? Will you wind down the Bitcoin mining operations, or do you still see, a lot of value in Bitcoin mining going forward?
I've thought about this a lot. I think if you have operations which are really streamlined and efficient, then the impact will be considerably lower, because essentially, we're paying 3 cents a kilowatt hour per power, sometimes a bit less, sometimes a bit more in Texas. We have probably another cent at these scale levels, another cent and a half for corporate overheads, another cent and a half for OPEX on the ground. So let's call it, 6 cents, 6.5 cents all in. And I actually haven't looked it up, but we're making between 12 and 16 cents, 11 and 16 cents in revenue on that. Now, I don't know anyone that competes with those numbers. So when you do have a halving event, your revenue comes down. You generally have a pricing change as well around that, or within 12 months of that. But let's assume that the price stays the same. Revenue comes down, but then anyone that's a high cost producer just turns off the machines because they can't pay the bills. So your hash rate should accommodate those lower cost producers, which we are. So I think that's a large, significant part of it. The other thing is when I worked at Macquarie, whenever we had a new counterparty, we had a whole bunch of KYC, AML around settlement. We used to use the SWIFT network, which a lot of the Western world uses, and it's really cumbersome and slow, and it has a lot of incumbent counterparties that run that network. I truly see that at some point, I don't know when it's going to be, I don't think anyone really knows, but a final settlement network where you don't have that counterparty risk or centralization risk makes a lot of sense to me. It solves a huge amount of problems globally, and that's what the Bitcoin protocol does. It's a final settlement network without that counterparty risk. So I would think if it continues to grow as a financial asset, it becomes a form of collateral, then counterparties that don't have a significant amount of trust between them, for example, vendors on different sides of the world, or banks between countries that aren't as friendly as they used to be, will use it as a final settlement network. And I think the fees will exponentially grow because they do have that limited block size when that happens, and it's going to be an all of a sudden event. But whether that happens in the next halving or the halving after, or 2 halvings from now, I don't know. But that's my thought process around it. So I do think it's an industry that's going to be very robust.
So you are a follower of the Michael Saylor view of as that adoption that adoption changes, or and I get one of the reasons we're doing a lot of work ourselves in the stablecoin space is because just the inefficiencies of the SWIFT and other means to move money around the world is dreadful when you've got the actual toolkit in blockchain and Bitcoin to move money around the world.
Yeah, I do. I think stable coins are a fantastic form of monetary oil. But those stable coins are backed by government currencies. I think, short to medium term, that's fine. I think if you want a pristine form of collateral to back trade, large volumes of trade, especially in commodities, then Bitcoin can act as that as well. And there's probably going to be a mix of both, and
So
you're always going to,
so you're an advocate of a really a DeFi layer on top of Bitcoin. So as a layer 2 and revenues coming through to make up any mining shortfall, and that'll provide revenues for all the miners in perpetuity, and there'll be no need to to lift the supply cap from 21 million, and it'll operate as a efficient network from here on. Does that about sum it up? Yeah. Okay, so no reason to switch the Bitcoin mining machines off. Let's just keep going, keep chugging along, keep that money printing. Okay, so just moving on from that side, Iren recently raised 440 million in a 3.25% senior convertible note offering due 2030, a much higher figure than was originally intended. You must be happy, Glenn, that this outcome validates the company's vision to expand into cloud processing. Can you run us through the margins of the new operations and the details of when you expect the cloud processing to be fully operational? I mean, at the moment, it is only a small percentage of the revenues that Iren is making, but you can see a future where this completely expands.
Yeah, so that cloud business is based in Prince George, one of the data centers that I look after. It isn't huge. We've got 1,900 GPUs though, and that actually provides at full utilization $30 million US. We put out an announcement a couple of days ago that we're currently on run rate of $26 million US per year on that. So it's quite close to full utilization at the moment. It's taken us a little while to get there, have those client relationships, build out the front to back processes to support customers, and the network itself. We started from scratch 12 months ago. So I think we've done a good job at demonstrating that we can do that. The business itself, from a power perspective, has 96% gross margins, which is the main input. So you really just you need to manage essentially the depreciation on the GPUs over 4, 5, 6 years. And manage how much you're going to use them in the last 3 years of their life or more but yeah, that's probably the biggest challenge of it. But I mean, that convertible note went really well. There's huge amount of interest for it. I was actually there in New York with a few of the guys, answering a whole bunch of questions from investors at the time. There were a whole bunch of new investors that didn't know about us at the time. Obviously, capital markets is a big world, especially in the US. So that was great. It was really enjoyable to hear Dan tell that story, in Kent mainly. Now it's Chief Commercial Officer as well. But yeah, I think beyond the cloud service, we're also running hard at opportunities in AI co-location. So that's probably where most of the focus is, co-location, where counterparties bring their own GPUs and then they pay us a lease rate for the data centers themselves. So we haven't provided specific guidance in terms of potential economics for that business, but worth highlighting, the market is valuing those that, I think you mentioned before, the PE ratios, or 25 times EBITDA for traditional DC. So that, that's very attractive for us.
Absolutely. And I guess that kind of capital markets instruments, you can't even get away in Australia. So that makes sense why you're doing a lot more overseas. Have you thought, we've got an election coming up, have you thought if you could talk to either party, what would you have them change in Australia to make, you guys operate here as opposed to spending your time in Texas and British Columbia?
Yeah. Australia is an interesting one. It certainly appeals to us, especially ex-Macquarie people, I suppose, in terms of the characteristics for site selection. So it's very bankable. South Australia, for example, has a large penetration of intermittent renewable energy, which appeals to us because we can, on the mining side, we can curtail and provide power back to the grid when they need it, and then pay for power when no one else wants it. So, I mean, that's a huge benefit. We're the only industry that really can do that in the world. Turn off and it not impact our economics.
Oh, absolutely. Materially. Yeah, I did understand that Australia actually pumps 5% of its power back into the ground because no one wants it at 2 a.m. or whatever. There's got to be an opportunity for someone to use that.
Huge. I mean, how much
An
solar
opportunity to, yeah.
and wind you can build out, which is intermittent, knowing that for 22 hours of the day or 19 hours a day or whatever, you're going to have someone paying that floor price of 3 cents, whatever it is, 2 cents, 4 cents. And then when it's off, or, when it's a full load, you're selling it for a little bit more to the rest of the grid because everyone wants it. So that encourages renewable generation. That's what's happening in Texas. That's why they're able to build out so much. So the best way to build out renewables is to provide the financial incentive that's not always just on the taxpayer. So yeah, that's probably what I would say. If given the opportunity, just explain that financial incentive. It's easier said than done to implement it, but it's pretty simple, the logic behind it.
I mean, headlines of Iren providing a universal basic income sounds good to me. You'd have a number of households who are not on the, providing solar back into the grid. They would immediately start up and, pump electricity back into the grid, and you guys could take it off their hands and regulate the, the flow. It makes a hell of a lot of sense, and every single state government should be looking to, to get involved in it. So I would say that Iren's a company that's at the forefront of that industry, and could easily advise the federal government and the state governments on that side.
Yeah, I couldn't agree more. Yeah, I think it amazes me how much of the world doesn't see the obvious advantages of that. But yeah, it is what it is, really.
Drew mentioned previously about Hut 8. Now, just going back to Hut 8, Donald Trump, or Donald Pump as we like to call him, his sons Eric and Donald Jr. have just signed an agreement just recently in the last 48 hours to build a dominant mining company with Hut 8. They're focused on AI data centers and Bitcoin mining. Do you have any thoughts on that, Glenn?
I did see the headlines. I wasn't sure exactly how it would work. Just, upstream. I mean, they need to raise money for the mining side. I think they're going to raise money separate from the AI side and try and split it. So just getting some more transparency there between the two operations. So, yeah, I mean, good luck to them. It obviously gives, in terms of support from those that are in authority at the moment, it's helpful for the industry to have people talking to the right people and from the regulators and SEC and everyone else, FCC or whoever else that does have an impact on our industry. I mean, you got the Trump contacts there. It can't be a bad thing for the industry. I would have thought it'd be a good thing for the US-based Bitcoin miners, which we are. So yeah, from that perspective, it's a good thing for us. Yeah, I won't sit and harp on any of the negative things, but yeah, they're the good things.
Yeah, that's right. Yeah, you may be able to shake hands with Donald Trump going forward. That'd be good.
That may be. Wouldn't that be?
So, in your position of interfacing in Australia and Canada and the US, you're probably in a quite a good position to comment about the strategic Bitcoin reserve that's been brought in. Do you have any insights that's worth sharing on how the US administration might buy Bitcoin without costing the US taxpayers anything?
I think it's obvious that it's been a net positive for the asset class. Nation state recognition of the importance of that digital asset and no real recognition of any other digital assets, which I think was as good a win as you could get from an administration. It highlights the unique nature of Bitcoin compared to everything else just through its decentralized protocol and immaculate conception, really. in terms of what's actually going to happen and are they going to buy any and it's not going to impact the taxpayer, there's not too much information on that. It seems to be more political rhetoric at this point. But I think the Overton window has definitely moved. I think the reserve is initially capitalized by Bitcoin that the Department of Treasury had through criminal or civil forfeiture. So it probably means that they're not going to sell that, which is a good thing. And then they've authorized the Secretaries of Treasury and Commerce to explore methods of acquiring it without incremental costs, which there are a number of ways you can do that. There's a whole bunch of stuff on X in relation to that people can read, but essentially like Bitcoin bonds or there's other methods as well.
There's your layer 2, the Bitcoin bonds that would get that going.
Yeah, Bitcoin bonds are layer 2, accepting donations in Bitcoin, potentially accepting Bitcoin as a form of payment for taxes and fees, mining Bitcoin like we do. So yeah, I think settling cross-border transactions, things like that. So potentially using the protocol itself for more international trade. So yeah, I think it's a fantastic thing. Like,
yeah,
I actually think in terms of risk reward, the asset class is probably at its best place it has been in a long time, 4 or 5 years.
Yeah,
maybe
just to give you a sense, and to give the punters a bit of a sense on, from the Jelly Sea perspective, what we're doing is we have recently acquired Trovio Asset Management, and as part of that acquisition, we inherited a fund in the Caymans with a feeder, and that fund was a digital asset fund. It had numerous digital assets in the portfolio. We've decided to refocus that particular strategy exclusively on Bitcoin, and then realizing, Bitcoin Plus. So using the collateral to enhance the returns over and above Bitcoin. So that sort of gives you a sense of, and the listeners a sense of, how valued we feel that Bitcoin is and the future for Bitcoin going forward. It's something that institutional businesses around, well, not just businesses, but institutions all around the world are now starting to invest in. So the outlook is rosy, no doubt about it.
Yeah, 2025
so question,
seems to
Glen,
be the... Sorry.
Sorry,
2025 seems to be the year of the corporate treasury strategy. Like Metaplanet, obviously MicroStrategy, a bunch of miners there, Tesla and that. So I don't know. I think that will continue. It forms a great base in terms of the volatility. It reduces the volatility of Bitcoin, I think. You've got more long-term plays, long-term investments. So yeah, I think that's a great move by you guys.
We don't like to talk about one of your competitors, but I hear, I just read recently, Marathon just raised another $2 billion to buy Bitcoin. So yeah, adding to their
I think
exposure.
They got $2 billion. You got GameStop with $1.5 billion they raised overnight that closed that convertible bond, and then you've got MicroStrategy probably doing $1 or $2 billion almost a week at the moment. So
yep, I spoke to some guys who are looking to do that in Australia as well. Copy MicroStrategy strategy.
Really?
Here in Australia. So we'll see how that lands. Yep.
Listed?
Yeah, they want to list. So they want to set it up to list.
Will the ASX allow them to list? That's the question. Yeah. Yeah, I'm feeling short Bitcoin. I need to go and buy some more. This is not advice for anybody, any of the punters out there. Okay, well, I guess the last question, Glen, for you. What does success at Iren look like in 5 years' time?
Yeah, we're putting, I reckon, 80% of the time in corporate, the corporate ranks, which is, tens of millions of dollars in salaries a year and time and effort, is spent on building that more complex, diversified revenue stream in terms of high performance computing. So I think success in 5 years is having 2 big businesses, one on the mining side, and one that we've built in terms of HPC with greater PE ratios, valuation, and numerous different clients, and probably a huge amount of development would have taken place in those two newer sites in Texas. One it's Sweetwater 1 and Sweetwater 2, so it's 2 gigawatts there that we're building out. So yeah, hundreds of millions of dollars we would need to have raised to build that, even more, billions. So yeah, 5 years time, if probably little cities in West Texas there, it's quite dry, and there's not too many people around. But yeah, if we've put that much money into it, they're going to be like little mini cities there. So it's going to be an amazing journey to be part of.
And can I add another one in there for you? Regulating all the grids in the states in Australia.
Oh, wouldn't that be
Come
great?
on, we need you here. No, all good.
That's been great, Glenn. Thank you very much.
No, thanks for having us, guys. I've really enjoyed it.
Thanks, Glenn, and thanks, Drew, for your time. Just want to throw out a challenge to our listeners, because Mena's been on my back. We need more people to like and to review Unblocking the Chain. So what I'm going to do is, for every like or every review that we get, I'm going to do a push-up, and if we and I'm going to add them all up, cumulative, in one day, and then I'll do all the push-ups in one day. If we get enough, I'm thinking 10,000.
Should I sit on your back for them?
Then I'll try and knock them all off. So I might have to do it in a couple of stints. But if we can get everybody to like the show, and Glenn, thanks again for your time. Drew, thanks again.
You. Be careful what you wish for, Chris.
Yeah, that's right. Menas, you're looking good.